Good morning, everyone. Thanks for joining the weekly research morning call. Today we have quite a few stock counter updates, such as say Prime US REIT, China Aviation Oil, NVIDIA, and some further on the ground, such as UMS. And as usual, we have the technical pause in Singapore weekly. Yeah, so this is the disclaimer. Basically, is for educational purpose only. Yeah, so without further ado, I'll hand over to Helena for C Limited. Helena, please.
Thank you, Meow. So I started rolling with C Limited, who issued their earnings last week. So the earnings overall, their fourth quarter revenue was in line with expectation. It grew 37% year-on-year, primarily driven by the strengths in Shopee and SeaMoney, which grew 41 and 55% year-on-year respectively. Their PAMI missed a little bit due to the higher than expected investment loss of 0.25 billion. So excluding that loss, their FY24 revenue and PAMI were at 103 and 98% of our estimate. Moving on to the positive point, the first one will be positive momentum still observed for Shopee. So strong e-commerce growth is still a bright spot for C. Their gross order and GMV grew 20 and 24% year-on-year. Increased take rate remains the key driver for this growth. Shopee's current take rate is about 8 to 10%, which is still very healthy compared to international competitors like Amazon, whose take rate is 15%. And C has also indicated plans to increase its take rate further, moving on to FY25. And monetization is also improved with C's continued focus on improving delivery efficiency. They're also trying to leverage on AI for some features like chatbot, which saves them labor costs. The second one would be SeaMoney. So SeaMoney growth is picking up speed. It delivered 55% year-on-year revenue growth, which is the highest in the last 7 quarters. This is supported by a loan book growth of 64% year-on-year. Shopee loan is always fast scaling because it's supported by the synergies with the expanding Shopee business. And meanwhile, off Shopee loan have actually seen a lot of improvement. They're making up nearly half the loan book right now. Because most of the C's market is low credit card penetration. So this kind of position of Shopee loan as a virtual credit card alternative for a large underserved consumer base. And despite its rapid growth, SeaMoney is able to sustain a very stable NPL ratio of only 1.2%. This is because they're managing their risk very effectively. So we think with strong momentum and increasing credit penetration, we definitely expect its loan book to expand faster than Shopee's GMV growth. Moving on to the negative, we do see really strong gaming metrics, but it's not really reflecting the revenue. So Genova has been demonstrating very strong user growth in FY24 throughout the year. Their bookings, GAU, GPU each quarter always increasing by around 20% year-on-year. However, their revenue declined through the first 9 months of the year due to what C explained as GAAP accounting. So they're trying to defer a significant portion of the revenue to the last quarter. So we did expect this quarter to be a very strong revenue rebound, but the actual growth of the quarter was only a modest at 1.6% year-on-year. So the entire year, there's actually a decline of 12% year-on-year. So C has projected for strong user matrix for FY25 as well, but to us, it remains a little bit uncertain how effective this will actually translate into top and bottom line growth. Moving on to outlook, management has guided full year GMV growth of around 20% year-on-year with better monetization. And the bookings for the gaming, like I mentioned just now, they expected to grow around the same rate as FY24, which is around 30% year-on-year. So we think overall, the growth of 37% was the fastest since the first quarter of FY22. So C actually faced a lot of pressure in FY23 because they're heavily investing in Shopee in order to counter the rising competition from Alibaba, Lazada, Temu, and TikTok Shop. So it appears that Shopee now has successfully defended its market position. The investment is still elevated. It has already become the norm, but C has definitely showcased its ability to balance growth and profitability. But this positive momentum has been ongoing for 1 year, and we think much of the positive news has already reflecting the stock price, which increased 145% over the year. So we do see limited upside from the current level. So after rolling our result for another year, we upgrade our recommendation from reduced to neutral. We raise our DCF target price to $140. So that's all from me. I'll pass my time to Darren.
Yeah, thanks, Helena. Yeah, update Prime US REIT. So they released the results about 2-3 weeks back, so we're on reservice, so I'm doing the update now. Yeah, so for their FY24 results, it was slightly under our expectations. So the year-on-year decline, you see 88.2% decline in DPU. So that's mainly because in the first half of 2023, they paid 100% of distributable income out as DPU, but in the first half of 24 is only 10%. So they started paying out only 10% since the second half of 2023. Yeah, so as a result, DPU declined 88.2%. But for the second half 24 is down 52.2%. So that's mainly because of the divestment of one town center and the AEI of waterfront at Washingtonian, as well as higher finance costs. Yeah, so for the positives for this results, FY24 results, leasing momentum is still strong. Year on year, it grew 1.9%, and it was at a positive 1.8% positive rent reversion. So in the next few quarters, we do expect some notable lease signings in some of the properties that are now about half occupied. So that will likely increase the portfolio occupancy to above 8 from the current 80%. Yeah, for their portfolio valuations, so it was a surprise to us. We were expecting originally some decline, but it actually grew by 2.2% to about 1.35 billion. So that's despite a rise in cap rate and discount rate. So that is offset by a stronger operating performance. There's more cash visibility in their leases, so that's why valuation rose. But if we include capex, they incurred about 35 billion capex last year. So if we include that, there was some slight fair value loss of $8 million. Yeah, for negatives for them is that in FY24, their interest expense was 5.1%. We expect that to rise to about 5.5%. That's mainly because they refinanced their main credit facility, which accounts for about 60% of their loans. So they refinanced that in the middle of July last year, and that came with higher interest rates. So we expect that to rise 5.5%. So currently 67% of it is hedged, and gearing, we think it's the likelihood of it breaching is extremely low now, since we saw the portfolio valuations are already somewhat stabilized. Yeah, so it's 46.7%. So for the outlook for Prime, there's still a flight to quality trend in the US, and Prime will be using the retained distributions to fund capex and tenant improvements as well. So that will help to attract and secure new talents. So this will be for FY24. So they're still like in the recovery phase. And starting FY26, it's likely that all these requirements will start to come down, like capex requirements and tenant improvements, as the market start to recover from some tailwinds like the return to office trend, like many companies, many corporates are already requiring, as well as the federal government also requiring the employers to return back to office 100%. Yeah, but for now in FY25, we are still expecting similar capex to help to drive the leasing, because now it's still at 80%, and we expect it to increase over time in FY25. Yeah, so with that, we maintain our buy call, no change in our TP, 20 cents. Right now, Prime is trading still at a huge discount, 0.25 times price to NAV. So because, like I mentioned, we still expect capex requirements to be high this year. So right now, we assume a 10% payout ratio for this year, and that translates to a yield of about 2%. And going forward in 2026, we expect the distributable income, or rather the payout ratio, to return to 100% as things start to recover, like as the rent-free periods and incentives that are signed in the first half this year start to phase out. So they'll have more liquidity, and as a result, we think they might be able to start resuming payout, 100% payout ratio in next year. Yeah, but we're still monitoring the situation, as we need to determine how much capex and TIs they will need next year. But for now, we are assuming 100% payout next year. Yeah, so that's all for me. I hand over the time to Meow Meow.
Yeah, thanks, Darren. Yeah, so China Aviation Oil released the FY24 result last week, and so their PATMI increased by around 35% year-on-year in FY24, but they only announced dividend of around 3.7 cents per share, which is lower than last year's 5.05 cents. Since last year had like special dividend. And CAO also kept their payout ratio at 30% unchanged. And that's why we believe they are underutilizing the cash, since they currently is holding around like 5 million US dollar cash in hand. And this is making up to around 90% of their market cap. And the results are wasting our expectation. Something positive is that associates profit increased by around 51% year-on-year, driven by the recovery of international visitors' arrival in Shanghai. However, second half saw slight decline. This is due to higher operating expense, but we do believe SPIA's contribution will continue to increase in FY25, as the profit from associates is only at around 80%, 70% of the FY19 level. And international visitors' arrival already recovered back to 84% of the pre-pandemic level. And the discrepancy was actually attributed by the lower jet fuel price in FY24. And looking ahead, we expect more substantial contribution from Shanghai Pudong International Airport, as the international air traffic is likely to recover back to around 90% of the pre-pandemic level. However, with the lower jet fuel price likely to persist into FY25, given it has like pretty strong correlation with the oil price, and the market is generally anticipating a downward pressure on oil price due to Trump's recent policy, such as easing Russia and Ukraine tension. Yeah, so the magnitude of the profit growth won't be proportionate to the increase in refilling volume. And something negative about CAO is their margin contracted for FY24 for its trading business. This is due to like trading volume on Asia to North America routes was actually impacted by the Red Sea conflict. And so there's like additional costs and longer transition time incurred. And consequently, volume for the Asia to North America route actually dropped it sharply, and the gross margin declined by more than 80%. And for outlook, we expect trading volume to rebound in FY25, supported by the contango oil market and also downward pressure on the oil price, which is driven by Trump's policy, such as urging OPEC to boost production. And coupled with the plan to resume 2 vessels per month for the Asia to North America route, so we forecast like margin to improve in FY25. And CAO is also further deepening its investment in the supply chain by expanding into other segments, such as they do engage in like a vessel leasing and storage of the oil currently. Yeah, so this is expected to boost margin further. And for its valuation, as mentioned, we do believe CAO is underutilizing its cash. And they also appear to be reluctant to raise the payout ratio in 2025. Yeah, so there's like they wouldn't be returning more capital to unit holders. Yeah, that's why we apply a 15% discount to its valuation. Yeah, so we downgrade from a buy to neutral, with a lower DCF back target price of $0.85. Previously it was $1.05. Yeah, that's all for me. I'll hand over to Ding for technical pause.
Thanks, Mel. Good morning, everyone. So I'll move on to the technicals. First slide on the S&P 500. So for S&P 500, as of last week, we saw a third consecutive week of decline. And last week's drop of 3.1% on the weekly basis was also the worst weekly decline in terms of percentage since September of last year. However, I think we could see a rebound ahead this week since the price is at a confluence of supports. First thing is that price actually retested this main uptrend channel it was trading in since start of last year. The uptrend channel highlighted in blue. And secondly, at the 5,670 level, this is a very important price level, as this was previously resistance turn support in the last quarter last year as well. And also, price is also at a 200-day moving average, an important long-term support. There's also bullish divergence in terms of RSI, where it's just holding the recent lows, moving sideways while the price was declining. So we could possibly see a rebound to actually retest this downwards resistance line in the near term. the resistance at 5,865, the upward bound resistance at 5,170, which was a previous horizontal breakdown level. Current support is around 5,740. However, if we do see a lower low, the next important support level will be at 5,600, which is a trend line as well as a psychological level. Next slide. Yeah, so next one we have a technical buy stop for UMS integration at $1.13. Take profit levels at $1.21 as well as $1.29. With a stop loss at $1.07. Last close was $1.12 on Friday. So for UMS, price has been actually trading in sideways since from $1.01 to $1.07 from August until recently. There was a breakout of this range consolidation. And then secondly, there was also a breakout of a downtrend resistance line, which price has been trading under since April of last year. So with that, we see a possible bearish to bullish trend reversal, coupled with the increasing momentum of MACD, where it has remained above zero line, and MACD is forming a higher high recently as well. So price could possibly rebound higher towards these two take profit levels, which were prior resistances. Next slide. And so for the summary of trades indicator for UMS, currently is in progress and is done. So I'll have a time to Paul now to talk about NVIDIA results. Thanks.
Yeah, thanks, Ian. I don't cover NVIDIA. Sorry, I don't cover NVIDIA, but this is for Yikban. He's on leave today. So the revenue, the profit beat our forecast at 106%. The key point now is the Blackwell, their latest chip is starting to ramp. It's almost 1/3 of the fourth quarter revenue, and that will drive growth in moving into FY26. The company mentioned that the GPU demand is still far outstripping supply. I'll move on to the negatives. The main negative is really just the tariff announcement. I think that is the big issue right now for NVIDIA. The tariff is not just on China, but now it's going to the rest of the world. And one thing is that the NVIDIA did mention that the ramp in Blackwell might actually taper down the margins. In the first half, if you notice on your left, the fourth quarter results, the earnings is still up about 72%. I think Yikban is forecasting FY26 earnings growth about 30+%. So I think the other issue is just that the slowdown from the stellar growth that NVIDIA is enjoying. So the outlook is that the new chips will be ramping up at least for the next 4 quarters. That will drive at least the next 3 quarters. So that will drive growth. And also the hyperscalers, which is your Google, Amazon, continues to raise their forecast for capital expenditure. So that will be the backdrop for the spending on AI GPU. And of course, NVIDIA is still the market share leader. I think he adjusted his numbers and he raised his WACC because of the tariff risk, and that's why his target price came down from 160 to 130. I'll move on to the next slide. For Centurion, again, this is for Yikban. So Centurion has 2 main business, which is mainly workers' dorm and student dorm in the UK and Australia. The revenue beat our forecast. The rental rates in Singapore continue to climb. That's why you will notice the earnings for the second half actually jump up 40%. Worker dorm room rates, just to give you a flavor, has risen from 400 to 500 to now around 600. And they still continue to enjoy high occupancy in the UK and Australia, about 95%. So the positive is the workers' dorm grew because of the room rates. Of course, we mentioned student dorm, and of course, the stronger operations also help them on the interest and the balance sheet. The negative is just that he mentioned just that the growth rate may slow after the stellar 40%. So in terms of the outlook, I think the management has mentioned that the demand supply might come to be more balanced, and that's why they think rental rates might stagnate. But what will happen is that some of their because all the worker dorms are on a rolling 1-year contract, so not all the contracts have refreshed to the higher rates. So you get that growth. And the second thing is that construction activity is still very vibrant, and this will help support the need for workers dorm. And I think there will still be FY growth from the slight improvement in rental rates, but also from the new capacity from Singapore. But growth rate will definitely taper down. He wrote down roll over his valuation, so his valuation is now around about $1.22. Move on to the next slide. Move on to HRnet. So HRnet is a recruitment company. Professional recruitment means the usual headhunting roles, and flexible staffing is more the temp job where they actually pay the staff pay salaries before they get compensated by the company. So that this one requires a balance sheet. The results was below expectations, about 85. There was a delay in the progressive wage credit scheme from the authority, so that actually knocked off about 3 million. So that will kind of bring forward to next year's earnings. But if you add that, it will still be low. So the positive is flexible staffing. If you look on the left, in general, is flat. So flexible staffing remains stable, and because the demand is still there, so from healthcare workers, from finance workers, even including in the back office, now you still the demand is still holding there. The negative is still the professional recruitment, headhunting. If you look on the table on the left, the number of placements, the number of workers they place or employees or headcount they place was down 22%, or although the revenue per placement because of higher wages is actually up. We downgrade from buy to accumulate, we lower our target price. But the stock is still enjoys an attractive yield. The dividend yield now is about 6%. They are still planning to buy back 11 million shares, and the company is still they still generate almost 45 to 50 million operating free cash flow a year. And they have a net cash of 258 million. So this company is almost similar to Propnex, very cash generative. Just that in the meantime, there isn't much growth because of the sluggish employment market, and because of what's happening now, employers are more cautious in their hiring. So some of the things that HRnet is planning to do is that their management team is right sizing. I think they're cutting costs, basically another way of saying. They're also consolidating space to kind of reduce their rental costs, which is the next bucket of the costs for them. The next large bucket of costs apart from staff. Professional recruitment, they're trying to move up the value chain. They always did it, but they didn't do much because for more C-suite placements means CEO placements. Because those require a longer time period. Now they're trying to re-emphasize that again. And the third thing is that they are expanding their flexible staffing. In the past, they realized they missed out on hiring of flexible staff or hiring of foreign workers. So we're not talking about construction workers. We're talking about maybe could be the first area they're targeting is like the airline industry. I think that's why this company called Crew is more for the blue collar and foreign worker staffing or services staffing. So this is where they're trying to move into for flexible staffing, and the strength they have is the strong balance sheet they have, about almost 300 million in cash. Next slide. I'll move on to Hyphens Pharma. They are technically still at the investment stage. The results was below our numbers, mainly because of all these investments that they're making. There is growth in the specialty pharma. You notice on the left here, it grew 24%. The negative is the DocMed part. So DocMed is still in investment stage. So this is a platform that they're trying to build. It's almost like a Lazada for all the clinics. So the strength of Hyphens is that they supply a lot of drugs and and also consumables to all the pharmacies around most of the pharmacies around Singapore. So they're trying to build this platform. It's almost like a Lazada. You can order and to include the pharmaceutical companies onto this platform. But that is in the investment stage, and that took a knock. You notice on the left here, it has a 600,000 loss for the full year is 1.2 million. But compared to 3 years ago, this was a profitable, almost 1.3 million profit. So this is almost like a 3 million hit to their earnings from this division. And this is huge. This company is making about 11, 12 million of profit. We maintain our buy recommendation, earnings, and target price. The valuations are attractive, even though they're making this they're still in the investment stage, about 7 times PE. They're still net cash. And technically buying a branded consumer company with a regional presence. So most of their Ceradan, TDF, Ocean Health, these are some of their own branded products. We do expect a bit of slower growth in 2025 because their proprietary brand is scaling up. Their trying to move more aggressive to Malaysia, but to penetrate all these retail chains, you need to pay up and you have to pay some marketing expenditure. So this one margins will be maybe under pressure. Specialty pharma should have some recovery because in Vietnam there was a bit of 15% decline in the second half, mainly because of a bit of overstocking, and that should help in the 2025 and also the newly licensed range products. So the setting is just that when you're small, when you invest, try to grow, you need to bear some upfront costs, and the market not going to reward you for this. They just need to market only reward you when you resume your growth. So that's what penalizing them. Next slide. Move on to Sembcorp Industries. So the title suggests the property saved the day because the results, the revenue was below, but the earnings beat mainly because of the huge land sales. So in terms of the positives, the renewables continue to be the growth area. So the renewables actually surged 36%. So it's almost like 8 gigawatt, which is huge. Because it jumped almost 36%. But the one that helped the results was mainly the integrated urban you see on the left here, 42% jump. Okay, they saw a lot of land, like selling land bank, so that did well, and that kind of helps beat our earnings forecast. I mean, most of the land sales is in Vietnam and also Indonesia. The negative is still China. So for China, they continue to first face this curtailment issue. So curtailment, what it means is that you might your solar or wind, mainly wind, but your solar and wind might be producing a lot of power, but then the grid, that means the state grid, is not accepting the power because they got too much capacity. So because of that, the curtailment is as high as 8 to 9%, which is a pure loss for a renewable company, because you generate so much power, but then the buyer doesn't want to take it, which is the grid. We raised our earnings mainly because of higher associate income, because they acquired Senoko Power, so that will boost up earnings for next year. Our recommendation, we downgrade from buy to accumulate, mainly because the share price just jumped up quite a lot recently. We roll our target price because of the when we roll over means the earnings is higher in 25, so that's why our valuations is also higher. Next slide. I'll give you some color on the various divisions. So for Sembcorp, they got two main divisions, or three on these days with the land. So the first is gas. So gas is just selling power in Singapore. The gas power plant that they have, the Sembcorp Cogen. They bought a new Senoko stake in November, so that will start to contribute in 25. The earnings is basically stable. Stable also means boring, but I know it's stable. So it's about 80% of their power is all long-term contracts. The big growth will only come in 2026, end of 26 or maybe early 27, when the new power plant is coming up in Singapore, the new 600 megawatt plant. But all the action, all the growth will come from new renewables. So second half, for 2025, they will benefit from the 3 gig of capacity they installed only in the second half. So if you recall, they got 8 gig. Most of that, almost half, only came in the second half. So this will be the big growth driver for them. They have another 4 gig. So you got 8 gig, then another 4 gig, which is under construction. Another one is 1.5, 1.3 coming on 25. So this will be where all the growth is coming from. And last year they took some write-downs in China, so that will also contribute in 2025. So renewables will be the main growth area for Sembcorp. So where are they doing well? India, they continue to win bids and the prices is rising, mainly because in India they are making more hybrid bids. So hybrid means they are so India has done a really smart thing whereby they are combining solar and wind together with battery too, because they know they don't want to face like China had this curtailment issue. The problem with renewable is now weather is bad, then you got no power, so you have battery to offset that. So Sembcorp benefits because they have that technology for wind, solar, and also battery. China, which has slowed. So China, but one thing that's the good and bad of it is that they are only 10% of the earnings. So curtailment should improve in China because the grid is spending 800 billion into improving the grid. But the problem, sorry, it's not in the slides, but the problem is that renewable energy, the last 2 years have grown almost 40% a year in China, whereas the power demand is only 6% a year. So obviously there's too much capacity in the near term. There was also talk about Singapore going into nuclear. They are engaging US and Chinese small, they call it small modular reactor, not one huge Long Island power plant in Singapore, but small modular reactors. So Sembcorp mentioned they are best positioned because they have the balance sheet for such a huge capital expenditure, and they have the customers, so they are the most best suited for it, according to Sembcorp. The other thing for urban that will do well, because of Vietnam and Indonesia, there is the whole wave of manufacturing coming out of China into Southeast Asia, so they are benefiting from that with all the land bank, especially in Vietnam. Next slide. So I'll move on to the weekly. Singapore had some strong retail sales, but it's hard to draw a trend. We'll need to wait for February because Chinese New Year was earlier this year. So retail sales jump up to 4%, 5%. I mean, which is I don't think it's sustainable. Obviously, Singapore retail sales normally only 1 to 2%. It's quite pathetic. Retail sales excluding motor vehicles. Supermarket also jumped 11%. I don't think this is like COVID. Everybody is hoarding their pantry or the shelves. So this is the Chinese New Year effect. Construction awarded also slowed down. Again, we think it's Chinese New Year, but the construction payment. So construction payment means construction activity on the ground is actually still doing very well. So construction is growing about 8-9%. Because payments is where you actually pay money, then you get the work done, right? So you're getting like 9% growth. So it's a very strong activity. Exports in Taiwan doing exceptionally well. I'm not sure. I'm not sure if this is front loading because Korea is weak. Of course, we got that payrolls number. It is below the 170,000 forecast. But the one notable thing, the one that everyone's watching now is the federal government jobs because it only grew 11,000, the slowest in 10 months. And also, federal jobs actually came down. We show you a slide later, but that's something we're all watching because of Dodge. Next slide. So move on to our tactical views. We think although the US market is could have a rebound like what Zain mentioned technically, but we think the US market still looks expensive. S&P, although it's down only 2%, it's still like 28 times PE. The Nasdaq is 38 times PE, although down almost 5%. The US market basically back down to the election levels on 5th of November. We think that the US momentum, when the momentum starts to falter, then valuations start to matter. So just to give you an example, Apple is trading at 37 times PE, although the revenue and earnings has been flat the last 3 years. So I'm not sure what's going on there. But I'm not to go and preach any investment gospel, but in investment, sometimes you need to also have some defense, especially in the US, and of course, avoiding losses is the key. So we think in the US market at least need to be a bit more defensive. We're not saying this for Singapore, but we're just saying more for the US market. And of course, the difference now, there's worries of a sharper slowdown in the US. Sentiment indicators are down. The manufacturing ISM is down. Consumer sentiment is also down. We just worry that this may move into the activities indicators. The one that everyone watches, which is the Aventa Fed GDP now. Sorry for the typo. Is also almost like 2.5-year lows or 135-week low. And also the worry right now is with all these Dodge freezing department budgets, freezing headcount, and also causing firings. So this may also be another trigger to a slowdown in the US. But the one, at least for the ASEAN markets, as per our Singapore monthly report, the one that we worry, which we hope is not will be a date that will live in infamy, is that when the US imposes reciprocal tariffs on the rest of the world. So for Southeast Asia, we worry will be the next wave could hit us. So right now is Canada, Mexico, next could be Europe, and then the third wave could be Southeast Asia or Asia. So that's the worry. Although Southeast Asia will still fare relatively better because China is still 20% tariffs, and so the China +1 is still underway. But for Singapore specifically, I think we have shelter in many sectors. Construction is doing well regardless of the trade war. Of course, defense industry, I think the government is spending 12% growth in the defense budget from 8% last year. Finance is of course doing well with the dividend yield and capital markets. Then property is of course gaining a lot of traction. Power in Singapore is doing well. I think the government raised their forecast for power from 3% to 5% per annum. And of course, telcos is a very defensive sector. Yeah, not so sure about StarHub, but at least Singtel is more defensive. Some of the events to watch is a lot in China. The US CPI will be the key one to watch, and then we have some of these events. Tomorrow we have TeleTrice. So, if you want to know more about mobile phones, if you want to ask them about Apple, how is Apple's phone, you can actually dial into that, and because they are a handphone distributor, so they can give you a lot of sense of handphones, because not everyone is watching whether will the adoption of AI into handphones cause another rally in electronic demand. So that's something you can ask them. Paragon and ESR. Next slide. Move on to again. This is just some seasonality. You notice supermarket jump up the blue line, but again Chinese New Year, so we normally won't look at it. We look for February. This is just the construction. So the blue line that you see here, the construction awarded. What the authorities is guiding in the midpoint, this could actually jump to 50 billion in 2025. So these are exciting times for construction. But the red line here, payments, which is activity, continues to keep on growing because it normally follows the blue line. Next slide. We'll move on to export. A bit of a weird divergence here. I'm not sure why Taiwan suddenly jump up. Normally, Taiwan and Korea exports move in line. So I'm not sure who is right here, but there could be some front loading. So this one on the right here is more an issue for Yang Zhejiang, and because container rates actually collapse. So the blue line is the container, the rates to ship from Shanghai to LA. But it's not only to Shanghai to LA, it's also Shanghai to Europe. So that is also collapsing. So February is down 30%, almost 27, and year to date is down about 23. February saw a major collapse. Actually, January was still up. Next slide. Okay, so this one is GDP now. So this is the one that everyone's a bit more worried. You see the blue line on the left here is suddenly turned negative 2.4%. And this GDP now actually quite accurate in terms of forecasting where the GDP is going. So it's the largest decline since the pandemic. So markets are really very worried. And also the one that everyone's watching is the hiring of federal workers. I mean, the state may hire, but the federal is cutting workers, and 2/3 of all the jobs in the US is coming from government, coming from social care and also healthcare. Next slide. Yeah, okay, yeah. So we had Philip, and we mentioned that we're going to just go through because we didn't have last year. So just to give you a flavor of the highlights of the UMS analyst briefing. The earnings was poor. If you look on the left here, earnings was down about 25% in the fourth quarter. But I think we mentioned before, because fourth quarter of last year, there was fourth quarter 23, there was a bit of front loading because customer wanted the discount, so they loaded up. So for their existing customer, which we believe is Applied Materials, they expect demand to be slow. Last year they were hit, we think, because they lost some market share from 70% to 50%. The other competitor that took up was SEM in Malaysia, a listed company too. But what they are hoping for is the new plant in Tampines will be starting soon. And the new Applied Materials plant in Tampines, so that can help them get some orders, but it will take some time. Their new customer L, which we guess could be Lam Research, is setting up a new plants. They have 2 new plants in Penang. That order probably we think can grow from 20 million to 40 million. So this will give them maybe a 5% to 8% boost in revenue, or even 10%. The orders is there, but they mentioned the problem in Penang is a labor constraint. They worry actually there's a lack of labor in Malaysia now, especially skilled labor, and also the wages are rising. Yeah, so that's actually the concern, because they're actually building a 3rd plant in Penang. The other thing is a secondary listing in Malaysia. They are listing in most likely in May. Not clear if they're going to issue new shares. So there is a 3rd plant coming in 2028, which is very positive, of course. Unclear if this is for the existing customer or this could be a new customer coming up. They wanted to remind everyone the competitive edge. They are fully integrated. So to do all these high precision parts, they have material handling, they have tooling, assembly, and blah blah blah. And of course, most important, they have the financial capacity for new machines, because some of these new machines can cost at least the large font ones, can cost as much as 2 million per machine. I'm not sure how many SME companies can afford 2 million per machine. It's like buying some condo. Yeah, or maybe cheaper, slightly cheaper nowadays than a condo, but not many can afford buy 2 or 3 of these sub machines. So they have the balance sheet to do that. So for us, we think if you assume mid-teens growth, from 10% revenue and then expansion in margins. So the margins was hit because when you do NPI, that means when you're working on new projects, you have to take on a lot of costs, engineering, product, material, and you have to bear all these costs to work with the customer. So that will hit margins, but hopefully that can recover in 2025. So if you assume 47 million profit, again, this is my guesstimate. So you're talking about 17 times PE. So some of the growth might be already priced into this stock in the near term. Yeah. Next slide. Next one is Franken. So to give you a bit of flavor. So for Franken, they are a bit different. They are also semiconductor, but semiconductor is 50% of the revenue. They also have a hard disk drive. They call it on the left here. Sorry, it's a bit blur. In the industrial automation, which dropped 50% because we know what's going on with hard disk drive. Their mini hard disk drive capital expenditure. So I don't think anyone is spending capacity for hard disk drive. They do medical and in instrumentation, and they also do auto. So auto is also weak, down 11%. The earnings was also dropped, so the earnings dropped 26%. Again, something similar to UMS. There was a bit of front loading. If you recall, in 2024, sorry, fourth quarter 24, not fourth quarter 23. Sorry, fourth quarter 23, sorry. That because of the China, a lot of their customers was front loading too. So that's why their profit was 13.3 million fourth quarter 23. So their main customer is a lithograph customer, which we believe is ASML. So they are running ASM parts for ASML's latest product, the ESE UV, and they're doing the RIMA part, which is the masking part. So they are raising the units from 1 to 1.5. So that will be the main growth driver for them. They also have a new disposition and etching customer, which we think could be Applied Materials. That is still slow, the growth, although they're doing new products. They said that in terms of the tariffs, which all of us are worried about, the customers are still, they don't have for them, they don't think it's a they cannot plan on a short-term basis because every 4 years the president changed, so they can't keep on changing their plans. And also the US may not have the ability and the people to work on all these semiconductor parts. So the US the customer continues to outsource into the region. But the one thing to worry about is they are looking to build a new plant, 40 to 50 million. So I'll talk about it later. The outlook is that they will still think semiconductor will still grow because of I think it's ASML, and medical will still grow but slower, but auto is soft because the whole auto industry is in the flux right now because nobody know how to compete with the Chinese. But we still think, we assume high single-digit growth. We just worry, for us, we worry they need some equity to fund the new plant. We're not sure how they're going to fund this 40 to 60 million, but one overhang, we worry they might have to raise equity. They never say that, but that's something that we worry ourselves. And the valuations is actually quite attractive now. It's about 11 times PE, but you just have to worry about this overhang. We assume 40 million in profit. Okay, next slide. Last few slides. This is our usual model portfolio performance. We were down to 0.7. We got hit almost everywhere except ST Engineering. We got hit by the REITs. I'm not sure. And then we got hit by China Aviation not willing to pay dividends. Then SETS we got hit because of the whole trade war. ST Engineering did really well. The banks are still holding up. Capital Land Investment recover. WeHer was down about 3%. I think because of the results, but we don't think that's a worry. Next slide. Then this is just for your reference, which sectors did well, which stocks did well. The bottom half is the SPDR, or because we cannot say STI, otherwise they want to charge us money. So we call it SPTR or the STI index gainers and losers. So Zhang Shipbuilding was down 22% last month. SETS, again, all these are trade tariff war victims. Yeah. ST Engineering did well, SGX. All this just for your reference for February performance. Next slide will be by February performance by asset class in US dollar terms. The bonds actually performed the best last year. Surprised the REITs didn't follow. Nasdaq was the worst performer. Next slide. And this is just all the various Asian equity markets, local currency, Hong Kong did well. Stellar performance by Hong Kong, 13% 1 month. Indonesia and Thailand were the worst. Again, all this just for your reference. I think we can move on to Q&A. Yeah, thanks everyone for listening. Yeah.
Okay, let me take on some questions. What is the outlook for Keppel DC REIT? Why is it falling? Yeah, so for Keppel DC REIT, I'll just check the most recent share price is $2.09. So my personal view is I think because there was some equity fundraising last year, end of last year, to raise over $1 billion. So that's over 20% of new issued share capital, like the number of shares. So we think there might be some selling there. Just a recap, the private placement was done at $2.09. So that happens to be the share price today. It is today, and the preferential offering was done at $2.03. Yeah, so my view, I think slightly that over the past few months, there's been some selling for those who took up those shares, and also yeah, the Microsoft also they mentioned that they cut back, but that doesn't really cut back on the data center leases, but that doesn't really affect Keppel DC because they do not have any exposure in the US. That kind of affects a little bit the Mapletree Industrial because they have a NA North America portfolio. Yeah, but for Keppel DC, yeah, why is it falling? Yeah, I think that's a selling of the shares. And what is the outlook for Keppel DC? Oh, that's answer. What is your recommendation on Keppel DC? Yeah, so for Keppel DC, we have a neutral call, and our target price is $2.25. But that's mainly because of the recent share price. It came down quite significantly, so that is why we still have a neutral. But yeah, that's our target price is $2.25. Mapletree, any reason to drop below $2? Yeah, so Mapletree Industrial, yeah, like I mentioned, might be because of the Microsoft, the leases. They cutting back on the data center leases, and as well as the fact that Mapletree Industrial, they have some like 3 properties that have already are known vacates. So there's another question below also that asks this. So it accounts for about 2 to 3% of DPU. So that the backfilling for that might be challenging. So Mapletree Industrial, they are trying to see what they can do, like do some power study and maybe reposition the asset, maybe divest the asset. Yeah, so they're reviewing what they can do with that. So that is there's a little bit of weakness there. So I think that is partially partly why the share price is weak for Mapletree Industrial. Far East Hospitality Trust, I'll leave that to Meow Meow. Yeah, outlook for CapitaLand and Ascendas REIT. Yeah, so for CLA, we think there is potential for rental reversions in the single digit. So in FY24, it was about low teens, I think about 12% for CLA. Yeah, but for CLA, they are doing some I'll call it intensive projects like AEIs and redevelopments. So they have about 800 million in projects that are under development. So that will help to boost organic growth in the coming years. And they're also looking to divest some of the lower yielding assets and about looking at about 300 to 400 million. And they're looking to acquire higher yielding assets as well. So there's some portfolio restructuring going on as well. And organically, we still expect maybe a high single digit growth for CLA. Yeah, so that is the outlook. TIs in prime years REITs presented just now. So TI is basically tenant improvements. So that includes anything that to help with the leasing, like for instance, improving like the toilets or the space, office space. Yeah, and that includes rent-free period as well. So tenant improvements basically are so-called capex or expenditure to help to make the office space look better and or rather upgrade the office space. Yeah, so that is a tenant improvements. So with all these tenant improvement spending, it will help to attract more tenants as well. So therefore, the US REITs, they need more liquid cash to help fund all these capex and tenant improvements to attract new leases in a market that is still recovering. Any reason why CICT outperforming and Maple Street Industrial is underperforming? Yeah, so for Maple Street Industrial, I spoke about it. But for CICT, let me see the share price today. But for CICT, my view is that because their portfolio is still very strong in Singapore, like over 90% in Singapore, as well as the fact that they just acquired Ion and it's contributing ahead of expectations. Like originally they underwritten is performing better than what they originally underwrote for the acquisition. So all these factors are helping CICD perform, and both their retail and office sector are doing well as well. Yeah, so that could be one of the reasons. Um, uh, yeah, there's another, the Maple Tree question that I was referring to. Any chances that the emptying US data centers will be backfilled successfully? Yeah, so I think in the near term is still from my view is still unlikely, and there'll be some downtime there. Probably um 6 to maybe even a year of downtime. Yeah, I think that's my view. Yeah, the impact to DPU is about 2 to 3%. Eh, yeah, I think I'll hand over to my colleagues for now. I don't see any more questions yet. Thanks.
I'll take over. Yeah, so wait, where is it? Also, Yangzijiang's, the recent sell down was actually due to like the phasing that is proposed to charge on made in China ships. And yeah, so it's up to like 1.5 million. But Yangzijiang feel like it will be easily passed on to the end customers, which will translate into like $100 per container. Yeah, and the probably like we believe the share price volatility is likely to continue until like there's further update on the issue. And for the fundamental itself, we believe in 2025 they're actually guiding like 6 billion order book. But usually they'll just revise it upwards. But however, we do believe like revenue for 2025 should be pretty flattish, since the workload they are expected will be similar to FY24 level, given that the yard has already been running at the full capacity. And they also do say like Korean shipyards are offering like earlier delivery slot and also like cheaper price than before. Yeah, so they actually see some orders lose to the Korean shipyard side. And there's also like two LNG carrier defaulted, and there's also like no upfront payment. Originally, they usually take like 20 to 30% deposit, but this two LNG vessel actually doesn't have a deposit. And they're actively marketing the vessel since they believe like at the time of the delivery, LNG market wouldn't be that good. And like Paul mentioned, container rates has been dropping. There's like more than 400 new vessels entered into the market last year. Yeah, so the supply demand dynamic has already being rebalanced. Yeah, so we believe it's probably already at the peak of the shipping this shipping cycle. Yeah, so the ship owner will probably be slower at ordering the new vessels. Yeah, so this is not good point for Yangzijiang. And for Yangzijiang financials, they still have pretty high non-performing loan rate. And the recent macro stimulus in China didn't really help to improve this debt collection. But Yangzijiang is actively engaging with the government to encourage them to buy back the land instead of selling it in the open market, which usually has like lower price. And they also set necessary impairments for its weak exposure. But they do foresee like the NPL ratio to increase in FY25. And they are still committed to their share buyback plan. Yeah, so that is supporting their share price. Yeah. And for Far East, the reason why share price like declined recently was actually because like Citi downgraded Far East to a sell, if I remember correctly. And the outlook is pretty muted since like average daily room rate in Singapore has already reached a peak, and there's only like they can only improve occupancy rate to improve RevPAR in FY25. And not to mention that there isn't any like mega concert this year. So no Taylor Swift, no Coldplay to support the ADR. And the recent acquisition was pretty small, and it takes like years to improve the performance for the new hotel asset in Japan. Yeah, so we do foresee like DPU growth will be pretty flattish this year. And the past DPU growth was actually because of the capital top up. They used the proceeds from divestment in Central Square to top up distribution. Yeah, so the growth was pretty inorganic, and we don't feel like it's sustainable. Yeah. Hope it answers your question. And for CAO, wait, sorry, I can't find the question. Yeah, so basically for CAO, we downgraded from buy to neutral is because like they are holding too much cash, which is around like 500 million, and it's making up to 90% of their market cap. We don't feel like they have any constructed plan of like holding this amount of cash. They don't plan to increase the payout ratio. After like PATME increased by more than like 40%, their payout ratio remain at 30%. And also like they didn't carry as much of they didn't carry out as much as the trading activity in FY24. Yeah, so we believe there's like cash drag in the company. That's why we have like a 15% discount to their valuation. Yeah, so for the future, in the future, what parameters should factor in better to avoid such big gap? Yeah, we just like one investor about like potential value trap of like those kind of company which is holding too much cash, yeah, and doesn't increase its payout ratio. Yeah, hope it answers your question. And what is the outlook for sets? We do anticipate a muted fourth quarter result. This is due to like seasonality. Since like Chinese factories closed down for Chinese New Year in fourth quarter, and in FY26, the performance will largely be impacted by tariff. Although like they don't say customers canceling the contracts, but they actually like has been uh relocating their supply chains. Yeah, so they do see like more cargo deliveries to Middle East, such as Saudi Arabia, instead of like directly go to the US. And also like there's increasing volume to Europe. Yeah, so they're actively like collaborating with their customers to setting up additional stations outside of US, yeah, to keep up with the emerging trend. But again, like we do see like a pretty high price elasticity demand for like e-commerce. Yeah, so with around like 10% increase in their price, probably we will see like around 20% decrease in e-commerce cargo volume. Yeah, so we do cut the FY26 PATME forecast by around 8%. Yeah, to adjust the trend. Yeah, hope it answers your question. I'll hand over to Paul, probably. Thank you.
I'll take the Apple question real fast. So Hannah, Apple, what is the ideal PE you're looking at, and what would be the next? Sorry, I lost the question. What would be the next price drivers for uptrend? The current PE ratio is around 37. I think the 10-year average is only around 22. So it was really on the upside. We forecast the PE ratio for FY25 is going to be around 30x. And the next price driver, it's actually supposed to be the Siri, the new version of Siri that they're supposed to push out this May. So this is something we're anticipating because Siri is one of the major upgrade that they have for the Apple Intelligence. But Apple actually just issued a statement saying there might be potential delay in the Siri release, that it might even go all the way to FY26. So they haven't really provided extra information on that. So I guess we just have to wait to see when they're going to roll out the features. Yeah, so that's all from me. I'll pass it to Paul.
Yeah, thanks. Sorry. Thanks, Elena. Okay. Okay, because so many people are not around, so let me just answer for them. OCBC opening price dropped to 1703, but recovered this point in time. Prices since results appear big. Your comments, please. Yeah, I think the results, if I recall, was from what Glenn mentioned, was that it was slightly below expectations. And of course, their dividends as usual also was slightly below expectations. So I think among the three banks, they were the probably the most disappointing in terms of the results for OCBC. The best place, what we like is UOB, because for UOB, we are still looking at, I think, 13-14% earnings growth. The DBS can't grow because of some global tax adjustment, and that's why UOB, we think, has the balance between growth and also dividend yield of, I think, I'm sorry, don't hold me to it, I think probably around the 6% or higher. Yeah. Keppel, please comment on Keppel as price appears trapped below $7. Yeah, thanks. Yeah, that is true. I think for Keppel, like we mentioned before, we don't think there's going to be much earnings momentum because you will only see that in 2026 because of the new plant. In the near term, it will all be about sorry, it's very heavy rain here. Sorry, we all about Keppel selling some of their assets. So I think in the near term, it might be admittedly it's going to be a bit sluggish because of a lack of a news flow coming up from Keppel. So yeah, because any assets they're going to sell is probably going to be in the second half because they just took over control of the rig, and I don't think they're going to sell the rig so fast because they want to boost up the usage of the rig, the utilization of the rig before they sell it. So I think this will mean only a delay in selling the rig. Because in the rig core, there's 4 billion of assets, and if they sell that, then of course there'll be special dividend and also re-rating of the stock. Outlook for Xpeng, yeah, okay, okay, so Glenn covers auto, but I can just share with you the comments that we had with Trends China Auto on the Chinese auto market. Just to give you some flavor. So the auto market in China continues to be extremely competitive, extremely price sensitive. So the number of players remain, and they continue to get new models almost every month. So there is no relaxation, and I think Tesla also been losing some market share recently, the first 2 months. So it continues to be a very brutal market. So Trans China Auto distributes BMW, and for them, admittedly, even BMW may not be able to compete on the quality with these Chinese automakers, because right now the way the Chinese are buying auto is based on the technology. So it can be on the FSD, that means your technology in the full self-driving mode. Now it's FSD 1 or 2, or ultimately it'll be 5, but they're competing and competing on, like voice controls in the car, all kind of technology, which I think the European makers also obviously finding it hard to compete with the Chinese. But in general, I think it's still a very competitive market in China. Yeah, I mean, that's what they said. Yeah. Is chocolate financing going to become China version of silicon? Oh, sorry, I'm not familiar with chocolate financing. Yeah. Let me ask Glenn to get back to you on this. Sorry, maybe I didn't read enough of this. Apologies for that. Yeah. Hi Paul, is HRnet a stable dividend stock like local banks since price very stable? Yeah, it is stable in general. They are paying dividends about 40 million. Their operating cash flow is about 45 to 50 million a year. Of course, you were asking why they want to pay so much dividend. I mean, the major shareholder owns 80% of the company. So no surprise. I mean, it's actually quite a nice big dividend that the owners get every year, like 30 million a year of dividends for them. So I don't think they will stop paying those dividends. And this business really don't need much cash. I think the capex they need every year is only like 1 million a year at most. Singtel, any reason for today's big movement down? Actually, no reason, no particular reason. Actually, 2 days ago, I'm not. Don't hold me to the date. Sorry, just slipped my mind. They actually announced a 1.2 billion gain actually. Because if you recall, they are going to set up, the Singapore Com Center in Somerset. So they're going to set up a joint venture with Lendlease to build a mixed development there, and Singtel is going to inject their land, and they're going to get a gain. I'm not sure how long they held this land, probably at cost. So they're going to get like a 1.2 billion gain on that, and of course this means special dividend. So I'm not so sure what was the selling today. The Bati share price is also holding up, so I'm not particularly sure. Sorry, but Singtel up almost 10% this year. And another thing they're going to sell is the Gulf which they are going to sell to. So it used to be called InTouch, so they merged with Gulf Energy. Yeah. So I don't. Sorry, I didn't notice any negative news. Yeah. Hi Paul, what's your odds of a US recession? It is rising, but I don't think it's something to be alarmed yet. But it is rising because of the cascading of events. If you get a trade war with Canada, Mexico, and then you see the consumers getting worried, they start to pull back. Once consumers pull back, then it will hit demand. Then after that, corporates will also pull back because no demand. They will have to fire workers. Then you get this very bad vicious cycle. We don't see that happening yet, the vicious cycle, but obviously it is a concern because corporates will be, I mean, no corporate is going to be spending anything now because they're not even sure what's going to happen to their whole supply chain. So the odds has increased, but as usual, we normally give 30-70 so that we cannot be wrong, right? So 30% chance of a recession. So that if there's no recession, I told you there's 70%, right? So I can never be wrong. But anyway, the odds is higher, sorry. Yeah. Hyphens Pharma has such a low volume most these days. Trading view, do you really recommend such a counter? Yeah, admittedly it is a low volume, but we've been covering them since the IPO, so we know we only do an update. I mean, it's a fair question to ask. I mean, but because we only do an update every 6 months, so we're just continuing it, and fundamentally there isn't anything wrong with it. But of course, we are not dealing only with fundamentals, we're dealing with the share price like you mentioned. So there is an issue. I mean, we admit to it, but sometimes if we cover the company for so long and maintaining it isn't such a big issue for economic reasons, we just continue covering it. Yeah. But it's a very fair point. I mean, how to buy, right? There's no volume, but so that is true. Yeah. Referring to HRnet, the payout ratio seems to be increasing. Is there any risk here moving forward on the share buyback scheme? After the shares been bought, will the shares be cancelled with lower share base, or will shares be moved to treasury? Yeah, they are right now in treasury, the shares. I'm a bit worried they will cancel it, because if they cancel it, the free float can be an issue. Because right now they own 80% and Fidelity owns 7%. The free float, you need about 25%. So I think they may not may not be able to cancel because of the free float issue. But we're not so worried about the payout ratio, because I think it's a moot point for them because they have the cash to pay now. Yeah. How you mentioned strategy, US PE 28 times not cheap. What is Singapore PE now, and is it expensive after Singapore PE right now is I think it's about 12 times PE. Yeah. Historically about 14 times, but yeah. Is the Atlanta Fed GDP now a one-off reading from the import front loading or more troubles ahead? Yeah, I still need to grapple with what because they don't share what components came off, but the GDP now looks at all kinds of data points of consumer confidence, manufacturing activity data, sentiment data too. It's not a one-off, so they do tend to trend, and I'm a bit surprised they are actually quite accurate in the sense. So it is starting to worry the market. It's a weekly, it's almost a daily number that is generated, but we compile daily. So it's just something to monitor. Sorry, I haven't done much reading as to how good they are, what's the components, so I'll need to get back to you. But it's just that we just pull up the data because it is something that the market is getting concerned of. Yeah, there is a slowdown coming soon. Yeah, in the second quarter. Yeah. But let me just do some because these type of things you need to read the Atlanta Fed studies, and I didn't really have time to go and read through the Atlanta Fed studies, like how good, how they design it, what's the weakness, and all these type of things. Yeah. Maybe we'll do it during our SSP. Yeah, sorry for that. Have the Dodge layoffs been included? They don't really disclose whether the Dodge layoffs have been included, but by default they should. I don't think they would. The Dodge only happened 20th January, so you don't really see it. No? I think since the Trump came in 20th January, you only get like probably 1 week of the Dodge effect. And since he came in, he only freezed the budgets. So and you know the Supreme Court has been pushing back on some of these department closures. So we're not sure how far they can go, but it's just something to monitor. Because in February you'll really see the number. And if it's really bad number, then I think the market will start to worry that this Dodge will start to pull back some of the employment numbers, because it's only been 10 days, because this is a January number. Yeah. Oh, so it's a January number. Yeah. Sorry. Sorry. It's a February number. My apologies. Yeah. Sorry. Yeah. So you only have like 1.5 months of it. Yeah. Sorry for the error. Yeah. Sorry. There's a lot of questions. Some I can't really answer. Okay, hi Paul, will Singapore be on the receiving end of reciprocal tariffs? How about the rest of ASEAN? So Singapore doesn't impose any import tariffs on US goods. So Hong Kong and us are zero. But the issue is how they define tariffs, because I think that, like we mentioned before, I think the US, it will be including the VAT, our 9% GST as tariff. So they might maybe impose 9% tariff on Singapore goods. So that is the worry, because they considered GST as a tariff. I'm not sure what is the rationale of it. No? Like what Jonker said, no, we can also do stupid too. So I think they're just doing the stupid thing. Yeah. So the rest of Asia is higher. I think Thailand is the highest. I think 7-8% of import tariffs. But you know, this import tariffs is across the board. Not sure whether is it specific to the US. Thailand has more tariffs because of their agriculture. So I think we are faring better, but more worrying is Malaysia, because Malaysia is where most of our electronic manufacturing capacity in. But regardless, we will still be lower than China. I mean, if China is a competitor, so what will take the hit is the foreign exchange. I think that's the worry. The forex will normally take the hit if tariffs are imposed on us. Why are UMS, ISDN, Grand Venture outperforming Franken and yeah? So Franken maybe, I think maybe there's a overhang of equity raising. I'm not sure. AEM guidance has been very weak. AEM, their guidance, I think we talked about it last week. AEM guiding for, I think, don't hold me to it. Sorry, the numbers slip my mind sometimes. Maybe high single-digit decline in the revenue for first half. So that's why they're outperforming. ISDN, I do not know. I don't really follow. Paul Keppel, what's holding the price right movement up? I think for us, I think the investors may not want to sell. I think that's probably one of the reasons. Mainly because there are still going to be some one-off gains coming from Keppel if they sell the non-core. We mentioned all REITs. The second thing is that the power demand is doing well in Singapore. So as you know, they are very well placed for data center. They have They have a fund. I think recently they closed one fund too and make some acquisition. So they were going to get some fee income from that. I think they was just announced this morning. So maybe that is some of the reasons. But admittedly, in the very, very near term, there isn't really any major catalyst. To be fair, because I don't think the earnings is going to be spectacular until their new power plant comes in second half of next year. So, so until then, maybe it's just no exciting news flow in the very near term. Yeah. That's my own view. Hypo looks like there's no Trump put but power put to play in his remarks on Friday. Yeah, Trump. Yeah, I saw that. I think Powell is still very cautious. Don't blame him. There's so many moving parts. So you're not sure what's going to happen the next day. So yeah. So hopefully, if there is a slowdown, then at least there is ability for Powell to cut rates. So that would be the protection on it. But again, so far the trade war hasn't started. So I think he seems to always back down from starting a trade war. And I think a bit of a mistake from Trump is that he started a trade war with so many people, right? So you want to start a trade war, you start one by one. You start to trade war with the whole world. Everybody gang up and fight with you instead. Yeah, so I don't know. Yeah, that's one view. How will China maintain its export competitiveness? It can't devalue its currency as warned by Trump. But it did actually. I think we did talk about it a few weeks ago in the last trade war in 2017 to 2018 when Trump raised tariffs by 17%. I think the Chinese currency also depreciated by a similar amount. There was one study done by I think Trump's economic advisor. So that could be the playbook for China to kind of also devalue. But you notice China is also raising their budget deficit. I think from 3 to 4 or 4 to 5%. From 3 to 4%. So China is also, the government is also stimulating, which is what all the other governments is stimulating. I think Singapore is also stimulating the economy. Our expenditure is growing by 12%, by 10% this year, total expenditure. The German economy, Germany is also stimulating. So how the governments are reacting to this trade war is also stimulating their own economy. So that's one thing. At least we do see it, sample size of Germany, China, and also Singapore. Yeah. Any expectations on US CPI? So the forecast is a bit, last month, the core CPI surprised the market by 3.3. I think the market is expecting 3.2 to 3.3. Yeah. Okay, for CDL, I think you should ask Darren, but anyway, with regards to the father and son feud, what would be the likely future? I think basically status quo, just tell everybody that his share price is worth $20, but he does nothing to it. So I think in a way, CDL is treating the minority shareholders like art collector. You look at this piece of art, it's $20, but are you generating any income from this piece of art? No. The dividend yield is only 2%. So I don't think there'll be any change, until the senior management really change. Otherwise, the treatment of minority will be still the same. I've got this piece of $20 RNAV art. You just enjoy yourself looking at it. That means it's a value trap, like a piece of art. No? Yeah. Will Citron be at risk of a crosshairs of Trump after Yang Zhejiang? We don't think so, because most of the vessels Citron uses is in Brazil. There could be one or two in the Gulf of America, I guess it's called now. So there's always that particular risk, but you can't. But then in the end, there'll be no rigs going into the US because there's no shipyard capacity in the whole of US. But there is always a risk. I mean, you can't say no. Yeah. But so far he's been targeting the China and not even Korea or anything. But there's always a risk. But I think Citron got bigger problems to worry, like turning themselves more profitable. Is trading at 40 times PE right now. Or less. Yeah. Okay, this one. Okay, so Yigma is not around. Will still price be affected by the coming tariffs in April? How will this affect BRC Asia? Okay, so the steel tariffs is going to be implemented on the 12th of March by the US. On China has always been there, is on European, Canadian. It could actually benefit BRC in a way, because then if you can't supply to the US you might actually make the shipments to other countries. So BRC may actually benefit from these lower steel prices to the rest of the world. So the US, of course, will have higher steel price. I'm not sure whether they got even their own enough capacity to supply their own needs, but usually when that happens, the steel will just move to other countries. Yeah. So in a way that should benefit BRC Asia. Yeah. Update on CSE Global. Yeah, may I know what's the yield? I think the yield's 4% or 5%. Yeah. For CSE Global, I think they are. It should be a strong year. I think we talked about it last week too. It should be a strong year this in 2025. Because the play for them is electrification of the US grid. So with EV coming up, even though Trump is banning, I think they are doing this major upgrading of the grid. Of all the especially in Texas, so that's where the growth is, and also data center work in the US. So in a way, they are benefiting from this on this inward-looking US. Hi Paul, why you mentioned not to worry for the VR? VR loss. What other news are you aware of? The VR loss was mainly because of the fair value loss. We should be issuing our report out soon. So the fair value loss is because they have one workers' dorm in Tuas. So that Tuas one will expire in 3 years. So they had to do a fair value loss because of time decay. The Pioneer Lodge dorm is coming up. It was also delayed. So that was the negative news from first quarter to second quarter. But it should be operational. So that's like a 10,000 bedder. So that should be operational in 2025. So that should contribute to earnings. The negative was also the construction earnings was down. But the student dorm, they are still selling. And if they sell it, this company should become a net cash company of 100 over plus million. Our expectations of dividends, I think, should be at least 6 cents. Yeah, special dividend, and they still have some more dorms to sell, even though net cash of 120 million. They got one more new dorm coming up, and they also have a 30% stake in the existing dorm that they 20 or 30% stake of the existing dorm that they sold. So there's another two more monetization efforts by them. Yeah. But I don't cover Zigban, but anyway, this is from he's on leave today. Yeah. Okay, Valuetronics has since fall back to support. What's your view for the future? Yeah. We are still positive on Valuetronics because of their 4 new customers they have. The one unknown is they're starting this AI GPU as a service, but they're not relying on NVIDIA chips, of course. So that might actually do well because of all this DeepSeek situation. So that could be the surprise. I mean, we're not bullish on their GPU as a service in Hong Kong in the long term, but in the near term, I think that could actually surprise the market, the contribution, because they obviously did the numbers and is obviously going to contribute to earnings. So yeah. Will falling profits at UMS cash flow hit badly in future and reduce our dividend payouts in 2025? Yeah, I think UMS cash flows will start to improve because most of the capex already done. I think this could be the last year. They are still spending I think 30-40 million, if I'm not mistaken, or more in terms of their capex. So this would probably be the last year of heavy capex because they are building the 2 new plants in Penang and the third and another new one. They bought the land. So I think the dividends will hold. I think the yield now is probably 4+%. Yeah. So I don't think the cash flows. I think the earnings will recover strong. Will be recovering in 2025 in the low to mid teens. I think our own estimate, our guesstimate. Yeah. Wow, a lot of questions. Hi Paul, any future on Genting up or down? I'm not optimistic on Genting because I think they are losing the high rollers. You have to wait until second half to reconsider because the high rollers demand has actually been very weak for them. Yeah. What's your view on palm oil counter, such a First Resources booming to palm oil pricing and First Resources is announced stellar results? Yeah, so First Resources results was very strong. I think up about 40% in the second half or more. Again, some of these numbers don't hold me to it. I just can't recall the exact. But what is helping all the palm oil in Indonesia is because of biodiesel. So biodiesel in Indonesia is moving from B35 to B40, and that will increase demand by additional 3 million metric tons roughly. And the whole market is 80 million. So this by default is good. That's why the palm oil price is rising because of biodiesel. And biodiesel price is doing well. First Resources is building new capacity in biodiesel, and they are benefiting from this. So they are, for First Resources, at least they got three kickers. The first is palm oil price rising because of biodiesel. Secondly, the cash cost is actually coming down because fertilizer price is coming down, or at least a little bit more because of the oil price coming down. Uh, so the margins the palm companies are doing well. And Myanmar has China business, so they won't benefit as much as the palm oil companies. Oh, sorry, my internet is stable. So Wilmar will not benefit as much as pure plantation companies. So palm oil companies might benefit from revenue up and also cost down. Can Citrum hold up the expected price? How long before we see the hit? Yeah, so we always view Citrum a bit of an all proxy, and we also worry that it's more of a trading stock. If it gets sold down too much, then you just wait for some news announcement of contract. So we are never positive. We've never been positive on Citrum anyway. Yeah. Okay, I think I hand over to the rest. I think yeah. Yeah.
Yeah. Sorry, let me take on one CBW. I think that is Stoneweg REIT. Yeah, so do we abandon that? Yeah, so actually no. So Stoneweg is still one of our top picks for REITs. Yeah, our report for the FY24 will be out this week. Sorry for the delay because I was going on reservice, but their performance still very resilient, strong reversions, but year on year is down mainly because of the refinancing of the loan and some higher interest expense expected going forward also. So that will result in a drop in DPU. But despite the drop, and also over the past few years, they also had a lot of divestments to keep their gearing within 40%. So despite all this higher interest on the new loan that they just issued and the divestment of some of the properties, they are still paying a dividend yield of upwards of 8%. So we think that is still very resilient. Yeah, sorry about that. We'll have more updates in our report this week. Yeah, but definitely for us now is not an abandoned like you mentioned in the question. Yeah, thanks. That's all. Hand over to Zane. Thanks.
Okay, thanks. Thanks, Darren. I'll move on to the technicals. Let me just share my screen right now. Okay, our first question, so 47 to 250, but it's still holding out its resistance. Volume a bit tapering off for now. I think we might see, and currently in terms of support, this trend line is holding it. So it's about at 237 about that. So I think if this is important for the share price to actually be supported. I think for now maybe at most to do a bit of range consolidation. With 250 still holding at its resistance. Price is still below the around the 5 and 10-day MA consolidation, but if there's a breakdown below 235, 236, we might see some downside again to possibly retest the recent lows about 220s about that. Yeah, so that's for Yangtze Shipbuilding. And this question is on AEM. Yeah, so for AEM, also quite looking a bit weak for now. Share this key uptrend support line over here in blue, about $1.30 there's a previously there was a bit of bounce from there, but the weakness actually continued on. A bit of increase in volume on Friday as well. So if there's a continue to stay below like 131 this support level, we might see some further downside for AM to test next support level at 122 next year. Since overall it's still in a weak trend since middle of January. Next one is on Alibaba. So for Alibaba overall is a strong trend, but I think we could see some pullback. Since price was unable to break above around this 140 level, was in a bit of a consolidation recently. And if the price continues to stay under this 140, there might be a short-term bull trend because of this increased volume, as well as price. There was a upper wick over here as well, above 140 on Friday. So a bit of a pullback today. We might see some consolidation in the near term. I think next support level will be around 125. The next one is around closer to about 115 about it. Yeah, when I look at the indicators just now, there's also some bearish divergence taking place on the MEC and RSI as well. So we might see some short-term pullback for Alibaba. Okay, the next one is on sets. Okay, for sets, I think overall downtrend is still trading within the downtrend channel. A bit of a sideways consolidation recently. Volume has also tapered off. So it's just, I think for now, maybe some sideways between the recent support and resistance, about $3.03 to about $3.17. A bit of a slight bullish divergence in the indicators for now. So, but price is still below. Price is still below some of the short-term moving averages, like still around the 510 MAs. And 20-day MA is likely to be a resistance, 320 confirming the downtrend channel resistance. So overall, I think we might see a bit of a sideways consolidation for now, but overall the trend is still quite weak. Then next one is Capital. Yeah, so for Capital, this 690 level still holding as resistance start this year. So I think overall nothing much has changed still. There was a bit of volume spike last day of February over here, but price was still unable to break about 690. So I think with that we might still see some continuous sideways between 670 to 690 this area for the time being. And then for Mapletree Industrial Trust, I think price has did a bit of sideways, but short-term wise, there could be some rebound. There was a pullback below $2, but there was a subsequent recovery and on a bit of increased volume, and price was holding it above $2 a few days. A bit of bullish divergence as well on the indicators. So I think in terms of the moving averages, if you can hold above this $2 level, we might see some slight bounce ahead for Mapletree Industrial. Near-term resistance will be likely around $2.06. This horizontal resistance with the increased volume over here previously. Then next one is Singtel. So for Singtel, I think overall, the uptrend is still intact. A bit of a range consolidation recently taking place, but good thing is that still higher swing lows being formed over here. 319, then 325. So we have some resistance still holding out at 342 about there. So we might still see some bit of consolidation, but it will be positive if continue from higher low, preferably above like 330, this level, which was the prior resistance. So maybe still a bit of consolidation for the time being now. This one is on some US counters, CVS Health. And so for CVS Health, I think overall it's in the downtrend, but recently turning a bit of a side more towards a range consolidation, possible short-term uptrend over here. So some resistance over here around 66 still, but positive is like a possible bullish flag over here since the gap after the earnings. So as long as continue form a higher lows, and recently also above the moving averages, 60, if like 63 still holds as support, then we might see some possible breakout of 67 to continue a bit of a short-term upside. Next resistance level possibly around 71.50, and also there's this is confirmed with a downwards resistance line as well. So yeah, there's a next resistance for CVS. And for Bank of America, I think there's some weakness for now. So we have a breakdown in terms of the consolidation structure over here, where price broke below this 42.50 level on high volume last week. So it's currently holding around this next support level around $40.80 over here. So the next support range about $40 to $40.80. I think might be able to hold here for the short term. So we might see a bit of a rebound, but I expect lower highs to be formed with the recent breakdown over here for around 42.50 to 43 will be the short-term resistance, given the recent weakness. Okay, then for C3AI, it's pulling back, but now it's at a key support level again over here around $21. So previously there's been some support over here when price came to this level. There might be some bounce, but overall I think should be still quite weak. Price is still around below the 5-day and 10-day short-term averages, MA. So maybe some resistance will still hold around closer to around 24 to about $26 area over here for C3. Yeah. So maybe some sideways consolidation if you can hold this $21 key support. Okay, next one is on Tesla. So I think Tesla has dropped a lot. I think it's the second worst performing stock in the S&P this year. So for Tesla, I think it's currently back to a confluence of support, a strong resistance around 265. This was before the elections. So there might be some rebound over here, but still need some confirmation. It can climb, but seeing some confirmation whether it can get above this short-term 5 and 10-day moving averages around 272 to 286, we're still posing a bit of resistance. So I think if we hold this level, we might see some slight bounce, but I think overall we're still quite weak. $300 likely to still be quite a strong resistance, given the psychological level as well. Then next one is Novo Nordisk. So for Novo Nordisk, this one's a bit of range consolidation, but see whether it can continue to form these higher lows, this stretch of higher lows over here after a double bottom over here at 79. Resistance $88, $89. Can hold as support over here, it will be positive for a bit of further bounce up towards 595 for Novo Nordisk. Then just now I look at it over on the weekly time frame, a bit of slight strength coming in. Previously weekly, you can see price was facing resistance for 5 and 10-day moving averages, but recently for the past 2 weeks it's been holding above it. So we might see a bit of a slight bounce continue, but I think 95 will still likely be the key resistance, on the horizontal level as well as the weekly 20 MA. The next one is NVIDIA. Yeah, so for NVIDIA, I think back at a key support again. So previously, I think it's currently trading within this downtrend channel over here. Then price actually tested the channel support around here, around $108 about there on Friday. So I think we might see some bounce over here if it goes, since price is closed above around $111 this previous swing low level over here as well. So short-term resistance will likely be around 118 as well as 120, 200 around there. Yeah, so we might see a bit of a slight bounce, but still need some confirmation you can get above the 5 and 10-day moving averages. 122 will likely be quite a strong resistance as well, because previously the main uptrend price was trading in this above this blue uptrend support line over here. Now after the breakdown, this will likely become a resistance for NVIDIA. Okay, next one is on Walmart. Okay, for Walmart, I think price is showing some weakness over here recently. So since price made a higher high recently, there was a back test and a lower high bounce over here, and subsequently it broke on Friday there was a breakdown of this blue trend support line on increased volume as well. So I think we could still see some short-term pullback. I think support level over here will be this swing $90 level. Afterwards will be likely around 85 to 86. This level which horizontal resistance previously and confirm with this upward support line, a lower upward support line for Walmart. Yeah, so maybe some short-term continued downside given the weakness. Okay, next one is for United Health. So this one, a bit of continuing on a bit of rebound from the 440 level. Also, after this consolidation of 475, continue on, there was a breakout on Thursday, Friday. I expect some resistance to come back in again around this previous support, around 500, the psychological level, as well as we have this downwards resistance line. So 500 to 510, this area will likely be still resistance active on it. Yeah, given that it's still overall in a bit of a downtrend recently. Okay, then there's a question on the Lion OCBC Hang Seng Tech ETF. So for this, yeah, so looks like a bit of a double top for now, around $1.01. Also, price tried to push above this resistance level on Friday, but there was a rejection with the upper wick on Friday, and today there's a bit of follow through weakness. So I think I'm expecting a bit of a short-term pullback for this Hang Seng Tech. Also given some bearish divergence in the indicators. So perhaps we could see maybe some short-term consolidation where it might come back to this 92 cents, this key support in the near term. Okay, then next question is on Apple and Chubb. Now, so for Apple, I think overall it's holding up quite well, despite the market volatility. We're seeing there's a series of higher lows being formed, as well as this double bottom with a lower wick around the 230 level. So I think overall, the structure over here, it looks like it's still in a bit of an ascending triangle. Maybe just highlighting a different color. Yeah. So key resistance still holding at 247 about there. So I think we might see price go back up to try and test the resistance again. So as long as this 233 level does not break down, I think overall still quite okay. Seeing a bit of a consolidation currently. Okay, then for Chubb, I think this one also a bit of a slight reversal in the short term. So since the breakout of this inverse and shoulders neckline at $280, price tested the current resistance at 290. A bit of rejection from this level, but as long as price can hold above 280, you might still see some upside to maybe test the next resistance closer to 300, which was this swing high, and this will also mark retest of this this blue color main uptrend channel breakdown level as well. So 300 will be quite a strong resistance. This for Chubb. Okay, let me see what's the question. Yeah, please comment on CICP. Seems to be uptrend recent currently. Okay, I wouldn't say it's in the for now short term is an uptrend, but I would say it's more of a range. I think this counter is if you look back, it tends to be the very large range consolidation. But but in the short term, it's outperforming some of the other REITs because this 195 level resistance managed to hold as support. But I think for now, maybe these $2.02 to $2.05, this area will likely be some resistance, given that it was a breakdown previously. So over here, we might see some consolidation take place again for CICT. Yeah, but I think overall, it's still looking quite good as long as the recent resistance breakout, this 198 level can continue hold as support. The next question is on First Resources. So for First Resources, I think there's been a bit of a spike recently, price clearing this 160 resistance. Also today, above 164, but finally, I think there's a bit of upper wick as of now. So I think some still short term, very short term bullish momentum. But I think you need to see price maintain above 163, 164, this breakout level, confirm the 5-day MA as well. If price gets below this level, we might see a bit of a pullback or consolidation to come back maybe towards like 159, 160. And then for Food Empire, also short-term bullish momentum. So price has actually risen quite a bit towards this previous range consolidation breakdown area. This was between first quarter last year. It was between 122 to 135. So after the breakdown of 122, price went on the downwards trend. Now it's currently back. I think here will likely be a bit of resistance. Price might do a bit of a sideways. Yeah. And but overall, short term wise still okay. If it holds above 120, this breakout level 119, as well as a 5-day MA 120. So we might see maybe it just turns to a bit of a consolidation for now. The next one is on Propnex. So for Propnex, I think still a strong uptrend. So as long as this hour support line is still holding 108, also the recent horizontal support, I think is still okay. A bit of a consolidation recently, volume has dropped off quite a bit. So I think it's just doing a bit of a consolidation for now for next. And for iFast, iFast some weakness for now. Price reverted back under this main uptrend channel is trading within. So also break below this $8 psychological level as well as previous resistance. So I think for now might come back to this area again at around 755. Around here is the previous resistance. So over here is a possible next support, but still need to wait for some confirmation as there's still no signs of selling stopping right now. So this might 755, then next one is maybe like 743, these two next short-term supports. Then around $8 here will be the quite a strong resistance from the recent breakdown. Okay, then so there's a question on capital infrastructure trust. What's your view given the price fall? Try to find the ticker symbol for it. And for this, I think overall it's a very range bound kind of counter, strong resistance above 45 cents. And as of now, I think probably nothing too much. Some short-term supports could be around this 42 cents level as well as at 40 cents. So maybe still a bit of range consolidation right now, I think. Okay, then there's a question on some of the Hong Kong counters. Any thoughts on Xiaomi, BYD, Tencent? Okay, for Xiaomi, I think also strong trend right now, but looks like maybe a bit of a sideways consolidation might start to take place. Some resistance above $56.30 and short-term support, I think, will be around 49.50 about there. Yeah. So maybe just do some short-term consolidation. Also, some bearish divergence taking place as well. In terms of the momentum, we might see, come to a bit of a sideways. Then for BYD, this one, there was previously was trading in a very strong trend. Then afterwards, there's a break of in terms of the moving averages, and price lost the momentum down. So currently, maybe some resistance will be around 364 over here, which was the previous breakout level. And then some short-term supports next will be around the recent swing low, like close to 333, this breakout level previously as well. So I think overall, you might see price test this swing low again, given this supporting the resistance in the short term. Yeah, you might see some further pullback in the short term. Then for Tencent, I think overall this one's still holding up well. Still, previously it was in the range for around 479, then to 515. The breakout, currently doing a back test. So as long as this holds, 510 over here is still okay. Price is still above the 5 and 10 day his. Yeah, this one I think is looking the strongest one right now. So yeah, we might still, as long as this is supported, we might still see some upside. Next resistance level will be the key resistance will be around 500, close to 580 over here. Okay, then back to some US counter service now. Yeah, for service now, I think overall still having some weakness over here. Price still below 5 and 10 day. And the MAs which are acting as the resistances. Then currently is back to his 840 level. There was a previous resistance. So over here, let's see whether there could be some bounce. Next support level below will be around to 810 about that. Yeah, then short-term resistance, if there's a bounce, I think we'll still find resistance close to 900, this recent breakdown level. So yeah, there might be a slight bounce, but still need to wait for some confirmation. But overall downtrend should be still quite intact for now. Yeah, there might be like this trend downward resistance line acting on it as well. The next one is Microsoft. Yeah, so for Microsoft, I think price is holding at a very important support level at 385, this support level. Then just a bit of consolidation sideways. Resistance still for now is about 400 to 410. I think this will still hold for this week. So we still might see a bit of a consolidation take place over here. Around the 20-day MA is also a bit of resistance as well. Currently around 403 around there. So maybe some sideways. As long price doesn't break below this 385 again, then I think it could be still a bit of range consolidation taking place for now. Okay, then next one is Amazon. So Amazon, I think currently it's back around this previous resistance zone of 193 to 200 over here previously. So over here, there's a bit of some support over here taking place, but I still need to see a bit of confirmation. Resistance will likely hold about 210 this level over here for now. Yeah, so that's for Amazon. Maybe still, okay, there could be some slight bounce, but I think it will just be a small rebound perhaps. Yeah. So that's for Amazon. Yeah, then for Meta, this one it's back at back at previous key support level. So price went back to this 600 to 630 area per hill, which was a strong level because previously price was consolidating within these levels. Over here, I think there's a long lower week on Friday as well. We might see a bit of a rebound take place this week, but I think some near-term resistance levels will be around 658 as well as 680 about there. And for Oracle, I think it's currently still holding this 152 key support level over here, which was this previous. There was a gap up over here that acted as a key swing low supports over here. So you might see a bit of a bounce. You might see a bit of a bounce over here, but I think resistance will likely still come around 161 to 165 in the short term. I think there's also earnings coming out as well. So I think that will move the stock in. Okay, then TA for the three Singapore banks. So first up is DBS. I think DBS is one, I think the strongest one right now, still holding within the uptrend channel over here. As well as the $45 key level here. So I think we might still see maybe some short-term consolidation take place for now. Some slight resistance above at $46.30. The next recent upwards will be the recent high around 46.80 about that. So these are two levels to think. And for UOB, I think it's just still very sideways, but overall still holding above this uptrend support line. Just sideways between like 38 to 39.20 in this area over here. So I think just still continue consolidation. Then OCBC is the weakest right now. It's below this upward trend line support. And this was after the result of the gap down, price move sideways and a bit of weakness carrying on. So I think the key is to see whether this 1680s, this level over here can hold a bit of a price for some bounce. If we cannot, then we might see some further pullback to test like 1650s over here, the next key level. So still some weakness over here, as long as price cannot get above around 1730 and above. Okay, then there's a question on UMS. Yeah, UMS for now, I think still okay. The breakout is still valid above the trend line resistance over here and the range consolidation breakout previously. So as long as this 109, 110, this level over here is still holding as support, I think it's there's still a chance for a further rebound. Volume is also still tapering a bit for now, so we might be doing a bit of a consolidation right now. The next one is on BRC Asia. So for BRC, I think overall it's trading within this main uptrend channel improve over here. Then for now, a bit of I think price now is a bit on towards the high side, the high side of the channel. And above this, there was a bit of pullback recently as well, from around 3 pence over here. So we might still see a bit of a sort consolidation for now. Yeah, as long as this short-term upward support line at around 298 is still holding, we might still see price consolidate highs. But if there's a breakdown, then we might see some further pullbacks towards the next lower levels like 280 about there. So that's for BRC, just consolidating for sideways right now. Then there's a question on Sembcorp Industries. Now for Sembcorp, I think still overall very strong. Since it can break out a few levels like 5, 6, 7, 5, 7. Turning a bit of a sideways right now. But as long as 10-day MA can hold around this 615, I think we might be just doing a bit of a consolidation right now. Volume also coming off a bit. So right now it looks like a bit of a consolidation. Yeah, as long as the recent breakout levels swing, I think 615 can hold as support, then we might still see this bullish momentum being intact. Okay, then there's some questions on Yangzijiang Finance, Jaffa and Raffles Medical. So for Yangzijiang Financial, overall it's a strong uptrend. Price doing a bit of a consolidation recently. It's in a tight range. Key resistance still at 65.5 cents, and volume is tapering off. So I think overall still uptrend is still definitely intact. A bit of consolidation recently, and price is holding above 5 MA. So I think if there's a breakout above 65.5 cents, then there could be still another leg up in the rally. Yeah, but if it falls below, let's say like 64 cents, then we might see some slight pullback towards like 62 cents. Yeah. So that's for Yangzijiang Financial. And for Jaffa, I think Jaffa, nothing much to comment. I think after the offer, it's just moving sideways. So still at 61 to 65.5 cents level. And for Raffles Medical, yeah, Raffles Medical also something similar to like Food Empire, going back to some of the previous recent levels. So previously over here, like around $1.90, around $1 over here was also like a previous support breakdown level. So over here, you might see a bit of a sideways consolidation taking place. Yeah. So overall trend is still okay. As it's still above the 5-day MA at 98 cents. Also, this was like a breakout level of these highs when volume was contracting on Friday last week. So you can still remain above 98 cents, still okay. But if it goes below, we might see some 5.96 cents. Yeah. So that's for Raffles Medical. And for Sheng Siong, I think I'll talk about TA portion. For Sheng Siong, I think nothing much. It's just moving sideways, but I think overall it's still moving. The uptrend since the breakout of 30th end of September last year at this 152 level, I think it's still holding intact. So it's just moving sideways for a very long time since November last year, between like 161 to 168. So I think nothing much has changed. I think like these two just consolidation right now. Yeah, okay. I'll hand over the time to the rest of my colleagues if they the other questions to cover things.
Zane, can you just touch on the SDR question? Thanks. Oh, Zane, you want to do the SDR question? Sorry.
Sorry, I just accidentally unmuted myself. So yeah, for the SDR, currently there's SDR for Hong Kong as well as Thai side. I think as of last week, Hong Kong expanded the SDR to 8 counters. So this SDR actually gives you a beneficial interest of the line security, which is listed itself in Singapore dollars. So actually, you actually strip out some of the currency conversion and those kind of fees. And yeah, so that's the benefits of investing SDR. Then they will track the underlying security. Then there's also for example, like in Hong Kong, there's also a minimum lot size. So for SDR, it actually reduces. There's a certain ratio given to it for the different SDRs. So they actually reduces the minimum buying size if you want to trade in some of these counters. So that's the benefits of the SDR.
Yeah, so basically SDR is just selling on the convenience, I mean, in a nutshell. But most people already have access to Thailand. Hong Kong, like mentioned, just smaller units, a bit more fractional in terms of so you can buy it a bit cheaper. I mean, but apart from that, you're just selling on convenience. I kind of like a better word, yeah. Let me just try to clear as much as I can. Sembcorp Industries India increased payout ratio means outlook is good. I think outlook is they should have done it last year, but I mean, it also means it's a bit more stable because but even with their payout ratio now from 20% to 40%, I believe, it is only a 4% dividend yield stock. So it doesn't stand out that way. I thought they, like we highlighted before, if you're a utility company, you sell yourself that you have stable earnings for the next 5 years, 10 years, then I thought your dividend should be higher. That's why our conviction isn't as great as if they had just pushed up their dividends higher. But I think maybe that could be the following year, they could probably raise that. But that is definitely true. I mean, they are raising it because they are now seeing, in the past, power prices was very volatile, but right now it's a bit more stable. After all, the power price already been capped by the EMA. Yeah. Oops, did I hear Gulf of America? Yeah, it's not me. This is Donald Trump's invention. Not Gulf of Mexico, Gulf of America. Yeah. KIT, what's your view on this stock? Yeah, I need to give a pass on this as well. I missed their results briefing, so I haven't been following this stock for some time. Yeah, apologies, I can't give you a good answer for that. Yeah, please comment on Sheng Siong. So for Sheng Siong, we are still expecting a growth. We think with the new stores that they got 7% new stores, so this should give them at least 7 percentage points of growth, roughly, because not all stores will have the same sales. Then plus same store sales. So we're still looking at maybe 8-9% growth. It will be better. But just that this year the impact will still be on salaries, because like we highlighted, they have this progressive wage model. Minimum wage, you just call it progressive wage, but I guess it's progressive, progressively at the higher minimum level, but it pushed a lot of the costs, so they are still trying to grapple with it. That's why that will keep the growth a bit slower, the earnings growth a bit slower than expected. But they are getting market share, like we highlighted, they are getting market share from Giant. So Giant gave up 2 stores which they won. So your competitor is walking away from HDB or closing HDB shops, so that will benefit them. Okay, so thanks everyone. I know we already crossed the 1 p.m. So thanks for all your questions. Thanks for all your time, and thanks for all those who said thank you to us. So thanks again for your time, and I hope it was useful, and hope to see you again next week. And do sign up for some of our corporate webinars, like I think Teletrust tomorrow. If you want to know more about the mobile market, you can ask the company which mobile phone is good too, but don't say I asked you to say that. Yeah. Thanks everybody, and take care. Have a good day ahead. Yeah. Bye. Thanks.